In this lecture, we're going to talk about business income insurance from Assignment 7 of the CPCU text. Before we begin to get into the characteristics of business insurance, let's take a look at where we are in context. Remember this page, the components of a sample commercial package policy. Up until now, we've mostly focused on this top area. We've talked about the building and personal property coverage form, commercial property conditions, and of course the causes of loss forms. Today we're going to focus on the business income and extra expense coverage form. Note that you have to purchase a different type of property insurance, such as a building and personal property coverage form and a cause of loss form, in order to be able to purchase the business income and extra expense form. Now let's look at business income loss exposures. What all is actually exposed and what is covered for a business. Keep in mind that if a business experiences downtime because of property damage, they will lose net income. Their revenues might go down and their expenses might continue. If revenue is greater than expenses, of course, they'll earn a profit, and if revenue is less than expenses, they'll experience a net loss. But sometimes a business, even that is operating at a loss, might experience extra expenses that they would not have otherwise incurred, minus the accidental property damage. So there's a significant area of loss exposures that one might not consider. Let's look at what all is covered by business income insurance. First, net income, also continuing expenses, and extra expenses. Let's look more closely at these. So as I said, net income is of course revenues minus expenses. Business income insurance covers the reduction in a firm's net income that was caused by accidental damage to property from a covered cause of loss. It also covers continuing expenses. If business is interrupted for a short period, many expenses will continue, such as payroll, debt payments, such as paying off loans and mortgages, insurance, such as your property insurance and your employee benefits, and other things. If an even longer period of interruption occurs, this will result in continuing expenses, but they will tend to get lower over time. For example, you may have to let go of some employees, so your payroll will go down. You may pay off certain debt, and you may discontinue certain types of insurance. This can be very difficult to estimate because it is all a matter of prediction, just as the net income lost is also a matter of prediction. But knowing exactly which expenses will continue and will not, especially over a long period of time, can be very difficult to predict. Additionally, a business income policy covers extra expenses. These are expenses that would not have occurred if not for the accidental property damage. For example, overtime labor that you might incur to pay employees to restock shelves or make sure orders get filled because of a short downtime, and the cost of expedited shipping for the same reasons. Businesses may not want to shut down because of future income loss, so they may incur extra expenses just to stay in business. Many times the business might lose customers if there's even a short period of downtime. For example, if a business is a coffee shop, customers might decide to go to a different coffee shop or a restaurant and may not come back. A newspaper may lose customers because other newspapers may start up if there's an extended period of downtime for the newspaper, and customers may cancel their subscriptions and not go back. A school might need mobile classrooms in order to continue to operate, especially a for-profit school. In order for business income insurance to apply, 4 things must first be true. First, there must be an interruption of operations that has occurred. Second, it has to have been caused by damage from a covered peril. And third, the damage was to property at locations or situations described in the policy. It doesn't always have to be covered property. And fourth, it resulted in a loss of business income and/or extra expense. Now let's discuss a pre-loss analysis of business income and extra expense exposures. One of the most important risk management steps is to have a disaster recovery and/or emergency preparedness plan. This can mitigate or reduce the exposure that a business has to business income losses in particular. For example, it can keep the business from having an extended period of downtime and allow the business to continue operations at least at a reduced level while the property is being repaired or replaced. Unfortunately, some business exposures, such as poor management, are just not insurable. A business income loss can result from damage at the organization's own premises or away from the organization. This includes dependent property exposures or contingent business income. This often results from outsourcing, having a single buyer, or a leader location. For example, if you're a business that manufactures steering columns for one auto manufacturing plant, and that manufacturing plant has a massive explosion, you may lose business income until that plant is able to purchase your steering column again. A leader location is a business that draws customers to your business because of the proximity to your business. For example, a large store like a Dillard's or a Macy's in a mall, or a Best Buy in a strip mall. It may be difficult to distinguish between continuing and non-continuing expenses. You can take a look at page 7.15 to see some differences. There are other factors that should be analyzed related to business income loss. For example, time factors. How long will income be reduced? What is the time required to replace damaged property? What is the time required to restore a normal level of operations? And you must consider the fact that if it takes a long time to restore a level of operations, you might lose goodwill. For example, if you're an accounting firm and your business experiences a fire in the offices during tax season, you might actually lose customers not only from this year, but for next year as well. Additionally, you have to consider that small physical damage might sometimes result in a big loss. This can be particularly true with bottlenecks. A bottleneck results when all operations come to one point, and the operational flow ceases if that particular bottleneck point is unable to operate. So for example, if you have a quality testing manager and you only have one person who is qualified to do the quality testing or testing that all specifications are met on the property, if that person is sick one day, then your operations may cease for that entire day or even longer. Additionally, you might have seasonal fluctuations. The accounting firm that I just mentioned would have a greater problem if the fire occurs during tax season than during another time of year. Holiday sales, universities, ski resorts, or other winter or summer types of recreational related organizations all have significant seasonal fluctuations to consider. Now let's talk about how to estimate the maximum loss of business income. EML is the estimated maximum loss of business income. In order to determine how much the EML is, the coinsurance basis can be a good starting point. The coinsurance basis is a projection of income and expenses for the 12 months following policy inception. Unfortunately, the coinsurance basis may not be accurate because you must consider non-continuing expenses, though they can't be deducted from the coinsurance basis. For example, if you have certain hourly wage employees that, particularly after a longer period of interruption, you don't continue to pay, you can reduce your exposure by that amount. There also might be other expenses such as materials costs and inventory costs that you can deduct from your exposure, but they cannot be deducted from the coinsurance basis. Additionally, it might take shorter or longer than 12 months to restore the business. And you have to consider peak periods or those seasonal fluctuations that we just mentioned. You can purchase extended business income loss coverage, which covers the difference between income just after the period of restoration ends and income prior to the loss. You automatically have 30 days, but it can be extended with extended business income loss coverage. Another thing to know about the coinsurance basis is that it only subtracts those expenses that are listed in the business income worksheet. Every insurance company will have their own business income worksheet. Let's look at a sample business worksheet at Travelers. Notice on their webpage, which is very convenient, there are several different categories of business income worksheets. Let's look at National Property Colleges and Schools. we can look here at the business income worksheet. This will trigger the insured to consider all of these different sources of revenue: tuition and fees, room and board, lab and other fees, books, etc. We won't go to the cost of goods sold worksheet, but let's look at the extra expense calculation also. These are additional expenses at temporary premises, such as the expenses of moving equipment to and from former premises, other new insurance expenses. And then down here we have other additional expenses, bonuses for quick service, lab cost, legal and professional fees, etc. Looking around at some of these business worksheets, and it doesn't have to just be this one, can be very useful. But let's go back now to our Prezi. Obviously, the Stillbrook cartoon isn't testable material, but this is a good indication of how much not being able to predict income can be a problem within an organization. Now let's talk about the business income and extra expense coverage form. There are actually 3 coverage forms: business income and extra expense, or business income without extra expense. Most are with extra expense, and then there's also just the extra expense form alone. Now let's talk about the key requirements in the business income and extra expense coverage form. First, you have to consider the actual loss to business income. The policy definition of business income is net income, net profit or loss before income taxes that would have been incurred, and continuing normal operating expenses incurred, including payroll. It is necessary for there to have been a suspension of operations. This can be a total or partial suspension of operations. Remember, it must be from an accidental property loss that is a covered cause of loss to the property described on the premises, unless it is a contingent business interruption type of coverage. Coverage is only during the period of restoration. Coverage actually doesn't begin until 72 hours after the physical loss or damage occurs. You can think of the first 72 hours as a deductible or waiting period, so that if the business only experiences a 72-hour business interruption, there will be no coverage. This exposure can be severe for some businesses, particularly those businesses who have spoilage concerns or are highly dependent on ongoing operations. The coverage period ends when the property is replaced or repaired with reasonable speed and similar quality, or the business is resumed at a permanent location. And as I said, the business income loss must be caused by direct physical loss of or damage to property at the described premises. Note, even if the property that is damaged under the BPP is excluded, if damage to that property causes a business income loss, it is covered. And finally, as I said, the loss or damage must be caused by a covered cause of loss. Whichever form was used for the other property coverage, like the BPP, the basic, broad, or special form applies for the business income loss as well. Note that ingress and egress are not covered by the standard ISO form, but some insurers actually do add it. Ingress and egress are the inability of customers to get onto and off of your business property. This can actually be a significant exposure for some businesses, particularly when their parking lot is damaged or some aspect of entry onto their premises. Now let's discuss extra expense coverage. These are expenses that would not have been incurred had there been no physical loss. These could be to completely avoid suspension of the business, to minimize the suspension, or to just overall reduce the amount of loss. The examples in the business income worksheet we saw with travelers were good examples, such as the cost of temporary relocation, the increased cost of insurance and lighting to continue operation at a temporary location. Additionally, the cost of setting up computer systems can be significant for any organization that is heavily dependent on systems. Now let's talk about the extra expense alone form. This is the third time element form or third business income form. Remember that it covers extra expense only. Businesses that do not typically have a loss of income from property damage because they need to continue operating no matter what might decide to purchase this form instead of a business income or business income and extra expense form. For example, banks, schools, and newspapers might all need to purchase this kind of form because any interruption in the business could be completely devastating for the business's future. Now let's look at business income additional coverage and a coverage extension. These additional coverages are available: civil authority, alterations and new buildings, extended business income, see estimating maximum loss, and interruption of computer operations, and then limited coverage for fungus, wet rot, dry rot, and bacteria. And finally, newly acquired location. For the civil authority additional coverage to apply, the action of civil authority must have been taken in response to dangerous physical conditions resulting from damage to physical property or to give civil authority unimpeded access to damaged property. Also note, newly acquired locations coverage only applies when 50% or greater coinsurance is shown in the declarations. This provides up to 30 days of temporary coverage. Now let's discuss conditions of the business income forms. First of all, duties in the event of loss. The only difference between this and the BPP is that it says the insured must resume operations as quickly as possible. The loss determination condition contains several parts. The first part lists factors that will be taken into account to determine the insured's income loss: the net income before the loss occurred, the likely net income if no loss had occurred, operating expenses, including payroll, that are necessary to resume operations at the same level of service that existed before, and other relevant sources of information. The loss determination condition also explains how the extra expense coverage will be valued. Remember that these are all necessary expenses that would not otherwise have been incurred. There is also a coinsurance requirement with business income insurance. The purpose of coinsurance is to encourage insurance to value, just as with the BPP, and it makes rates more equitable. The insured may choose any coinsurance percentage: 50, 60, 70, even 125%. Certain expenses are actually excluded from the coinsurance calculation, as mentioned before. For example, prepaid freight, discounts, collection expenses, cost of merchandise sold, cost of heat and refrigeration that do not continue under contract, and ordinary payroll excluded by endorsement. Because these things are not included in the coinsurance calculation, they don't reduce income as much as they otherwise would, and therefore result in the insured having to carry more insurance to meet the coinsurance requirements. Now let's talk about optional coverages for modifying coinsurance. First, the maximum period of indemnity. This is reasonable for an organization that is unlikely to sustain a loss for more than 120 days, which is 4 months. This has no coinsurance requirement, but it is a much higher premium per month. However, in the end, the insured would end up purchasing a lot less because they're not basing their coinsurance requirement on 12 months. Another option for modifying the coinsurance requirement is the monthly limit of indemnity. This depletes the coinsurance clause, but limits the recovery to a stipulated fraction of the insurance amount. We'll look at an example in a moment. Additionally, there's the agreed value option, which is comparable to the agreed value option of the BPP, and the no coinsurance requirement option. This option eliminates the coinsurance, but because of the increased rate for no coinsurance, it is unattractive to insureds and is seldom used. Now let's look at an example of monthly limit of indemnity. Let's assume the insured estimates the period of restoration is 3 months. This is based on their belief that it will take them 3 months to restore operations. That generates a fraction of 1/3. 4 months would be 1/4, and 6 months would be 1/6. The maximum loss in business income is expected to be $75,000, so that is the insurance amount. This gives them $25,000 per month. The limit is not prorated. In other words, if you have a full $25,000 loss, in other words, it's not split up into the portion of the month. This is fairly simple, but it might result in over or under insurance because the business owner may fail to properly estimate the period of restoration. It also ignores extra expenses and EBI exposures. Let's talk about BI coverage options. Blanket business income is one option. This may be written with any coinsurance percentage. There are several different payroll coverage options. For example, ordinary payroll can be covered in full, but only to the extent that such expenses are necessary to resume operations. Even though ordinary payroll is covered in full, the insurer might contend when settling a claim that continuing ordinary payroll was not a necessary expense and thus not included as part of the covered loss. There's also an option for a power, heat, and refrigeration deduction endorsement, only available for manufacturing and mining firms. This is because for these types of firms, energy expenses often do not continue under contract when they have a business interruption, and so the amount of business income coverage that the insured needs is much less than what they need to meet the coinsurance requirement. The power, heat, and refrigeration deduction endorsement allows them to carry less coverage. There's also a business income premium adjustment endorsement that can be used to address the problems insureds face in determining the proper amount of insurance needed to satisfy the coinsurance condition. The business income premium adjustment endorsement bases the earned premium on the actual exposure as reported by the insured at 12-month intervals. When this is used, the policy covers business income losses subject to the stated limit of insurance, which must be set high enough to cover any anticipated loss, or to satisfy the coinsurance condition, whichever is higher. Another business income coverage option is the endorsement for dependent property exposures. Dependent property loss exposures arise when an organization could suffer a business income loss because of damage occurring at a premises of some other organization. We talked about this exposure earlier. The other organization could be a leader location, a main supplier, an important or single buyer. This allows the business to have coverage for income lost because of business interruptions at a dependent property. Additionally, there is business income changes for educational institutions. This can be used to modify business income forms to make them more appropriate for covering the business income loss exposures of schools. The endorsement addresses the critical time period faced by a school where schools are only in session during certain months of the year. And finally, the utility service time element endorsement. This can be added to either of the ISO business income forms or extra expense coverage forms to cover the loss of business income or extra expenses caused by the interruption of utility services, such as water, communications, or power, to the insured premises. Many businesses are highly dependent on water, communications, and power. Therefore, this might be a critical endorsement for most businesses. And that concludes our discussion of business income insurance.